Hello, everyone, and thanks for taking the time to review the Santa Clara County, California real estate market analysis for August of 2008. My name is Robert Whitelaw. I'm a licensed California real estate broker. I'm also a member of the National Association of Realtors and a certified ePro. And this presentation is brought to you by my company, Whitelaw & Sons Real Estate Services, serving all of Silicon Valley. Now let's go ahead and jump right into the numbers for August. Now the first column we're seeing pop up here is all the homes that have sold. Now we've got some pretty good news this month. Solds have actually gone up in August. As you know from last month's presentation, I was kind of anxious to see what the numbers did in August. I thought it would be a good indicator of what we're going to see in the future. Now, just to sort of lay out the basic numbers here for you, sales were up 13.7% in August of 2008 when compared to the same time last year. That's 108 more homes sold in the August of 2008 than in 2007, for a total homes sold of 895. So that's actually pretty good news. The next thing we'll look at is new listings. These are homes that were listed in the month of August. You can see that number has also gone down. That is also good news. That's down 6.9%. That's 134 homes fewer than the same time last year, for a total of 1,820 homes listed in the month of August in Santa Clara County. Now, here's the bad news. The inventory has continued its rise when compared to the same time last year. Inventory is up 24.4%. That gives us 1,170 more homes listed in the month of August in 2008 than in 2007, for a grand total of 5,965 homes currently on the market. Now, while that's bad news, what's really more important is the ratio, or the relationship, between the number of homes that have sold and the number of homes that are on the market. So sales have also gone up, and last month that ratio was 6.9. So basically what that boils down to is, for every home that's sold, there were about 6 or 7 homes on the market trying to get sold. Another way to think of it is if the market numbers froze right now, the inventory numbers and the sales numbers, it would take 6.6 months from now to get those homes sold. Now that's down from what we were seeing last month in July. That was at 6.9. So as far as the relationship between those two numbers go, we're heading in a good direction. When we think about previous months, and we're going to look at that data next, it's actually a fairly encouraging picture. Now let's go ahead and take a look. And first we'll start with the solds. The solds are actually down on a month-to-month basis between July and August. They're actually down 0.1%. Only one home difference. We sold one fewer home in August than we did in July. That is excellent, because if you look at last year, you can see that there was a more dramatic change. We've had really very stable sales county-wide since about May, which is great news. Last year, as you can see, we got a very short season. It really started in May, and then really from there just declined and declined and declined all the way to September. It's been much more robust. It's been much more extended this year. So when you look at the relationship between the months of last year and the months of this year, if we look for what we might expect if we were to assume last year's numbers reflect what we're going to see this year, and so far they haven't. So I'm not sure that I would say that. We would expect after August a pretty dramatic dip in the number of homes sold. Now, given the season, I would normally say that's the way to go. That's the guess to make on the number of homes that we're going to sell in September. But I'm not convinced of that, simply because we've seen a lot more consistent buyer interest. Now, buyer interest hasn't been high enough to really be bringing those numbers down as far as inventory is concerned in the long term, in the year-to-year comparison. But we've really managed to sort of get inventory to at least flatten out a little bit right now. Now, I'm not calling any trends yet, because between July and August of last year, we actually saw an increase in inventory. We saw a decrease this year in inventory, which is again good news. But what these numbers are telling me is that we're seeing a pivot. We're at a change point. We're in a transitionary stage. And I think we're also going to be faced with a different dynamic than last year, where buyers are starting to come out because they're seeing homes selling at some amazing prices. And I think we're going to see more consistent buying extended a little further than we're used to given the time of year. So I'm optimistic that September might actually be a month with fairly good sales numbers compared particularly to last year. I think we'll definitely get higher sales numbers than last year. But I think that we might even see that extend all the way into October, which would be a very good sign for the county. Now, the total number of listings changed between July and August. We were actually down 14.8%. So that's 317 fewer homes listed in August than July of 2008. Inventory down 4.4%, so there are 276 fewer homes on the market in August than there were in July. Again, a good sign. And let's go ahead and refer back to last year at about the same time. If we look at August of last year, we look at the inventory numbers, we see that there was actually a pretty fairly steady increase in the inventory from May going up to August. It wasn't quite a direct line, but it was definitely trending that way. This year, much more flat. Ever since April or May, it's really been relatively flat with an up and a down and up and a down, usually the same magnitude, without it tending up as much as it did last year. And as far as the homes listed numbers go, back in August, we definitely saw a peak compared to the previous month. Didn't see that this year. Saw a decline this year. So again, I think these all sort of point to a market that's in transition. There are different things clearly in play here. Not everything's being trended down. We're seeing good news in some areas, middling news in others. No horribly bad news except for the inventory number. And if it weren't for the relationship between the inventory and the sales numbers, I think that would be a pretty depressing number. But frankly, I don't think anyone should get overly tied up by that. We have so much inventory and we've had it for so long. It's really going to take a while for us to deal with that. Now let's go ahead and take a look at home prices in Santa Clara County. Now the average sales price was $848,416 in Santa Clara County. Now of course you can see we've got a substantial dip here in 2008, August of 2008 when compared to the same time last year. It's actually down 21.8%. Which is a total dollar value decline of $237,174. Now that's obviously a very big jump. It's brought us back down to pre-2005 numbers, somewhere between 2004 and 2005 actually. That's what we've been seeing in a lot of other areas, not just here, but also across the country where folks will talk about we have finally hit pre-2005 or 2004 sales numbers. But what's interesting about the market is we are still seeing some pretty good sales at the high end. Just simply, it's far more weighted towards the lower end as foreclosed properties are really making up a huge chunk of the number of homes getting sold. Now, the highest priced home that sold in Santa Clara County in August of 2008 was on Spage Court in Saratoga. That home sold for $4,200,000. It had a list price of $4,495,000, and its days on market were 99. Now, some of you might have access to the MLS and might go and do a search of your own and note that there was a home that was higher priced than that sold in Montecito. Now, the reason why I've omitted that is because it was what we call a pocket listing. It wasn't on the MLS. It was listed and sold by the same office and was not put into the MLS system until after it's sold. So the reason why I'm excluding that is there's really no way to know anything about that property except for who the buyer was, who the seller was, who the agents were, and what it sold for, simply because since it's not, we don't know what it was originally listed for. We don't know what the drop in price was from its original. We don't know its days on market. It doesn't give us any good data other than it's sold. It actually sold for a little over $5 million. But I omitted that one simply because it didn't provide valid data for anything else, since it was never in the multiple listing service until after it had sold. Now, the lowest priced home was on Tennyson Lane in San Jose, and that's located right near where King and Story cross, just south of the freeway. Now, that home sold for $262,500. It originally listed for $244,900, so you can see that home sold for quite a bit more than it was listed for, and that was a bank-owned property. It was real estate owned by a bank. Now, I didn't get a chance to get into that home. It was only on the market for 8 days, according to the MLS system, so I never got a chance to get inside that home. But judging by the photos, it was a serious aesthetic catastrophe. I mean, it was as far as the inside needed to be updated. They needed some new drywall installation, definitely new floor covering. So a lot of work to be done there. But I'll tell you, whoever purchased that property, if they go in there and just spend a semi-reasonable amount of money, they can end up having a house that's going to be worth a whole lot more than that in a couple of years. So a lot of people getting some amazing deals. The foreclosures definitely up as far as sales. I don't mean homes being foreclosed, but just the number of folks that are getting some amazing deals on foreclosed properties. Now I'm going to start putting together a list of foreclosed properties in the areas I serve. If you're interested in that, go ahead and get in contact with me via any of the methods that I'll spell out for you here at the end of this presentation, and I'll be happy to email you every week a PDF of all the current foreclosure and short sale properties that are currently available in Silicon Valley. Now let's go ahead and look at the home prices just for recent months. Now the average sale price again was $848,416. Now we can compare July to August. The home prices were down 4.3%. Dollar value is a decline of $38,220. Now, this pretty much tells the story. There's really no mistaking what's happening with this particular set of numbers. We're just seeing a steady decline. We got a little bit of a boost last year in August. This year, just down, just everything down. And I think so much of this is being affected by foreclosure properties that are going through the sales process. Lots of huge numbers of properties are foreclosures and real estate owned and short sales. So that's one reason why these average prices have been so low, because we're definitely still seeing some higher priced homes that are selling in various areas, but homes that are owned by banks or that are going through the short sale process definitely make up a huge percentage of the total number of homes getting sold. So we've just seen a steady decline here, which I think we will see continuing. We've got a big inventory of properties that need to get moved out. These low numbers are just going to draw out buyers. So instead of thinking of this as bad news, and of course it is for sellers out there who are struggling with how much they owe versus what their home is worth, the good news is, though, news like this, property values down to this level, are really going to bring out the buyers. And then with my anecdotal experience over the last couple of months has very strongly shown that there are plenty of buyers out there. I have a record number of folks out there searching for properties on my website. I also have lots of folks contact me directly wanting to know specific information about REOs and short sales. So the interest is out there. I in fact, historically, when the market was hot, I didn't have these many buyers at this time of year coming around looking for property. So this is definitely an encouraging fact, and it's going to be one of those things that helps bring our market back. Now, let's go ahead and look at days on market. This is also another one of those graphs that definitely shows how the market's been moving over the past 3 years. It was one of the first things we started to see when the market started to go south, and that was an increase in the amount of time it took to get a home sold. Now, between August of 2007 and August of 2008, the number of days on market for homes to get sold increased by 31.6%. That was an 18-day increase from the year before. Last year, 57 days in August of 2007 to get a home sold. In August of 2008, 75 days. That's actually not horrible. It's actually a pretty good number, particularly when you think about some other parts of the country where properties on average are on the market for a year or more. So a relatively manageable amount of time, probably not what a lot of folks are used to who were shopping for properties back in the early 2000s. But again, it could be worse, and we've seen worse months. So things are definitely still trending a little bit better. Let's go ahead and look at just the months over the last year. We can see definitely the seasonal influences on this one. Between July and August, the change was 1.4%, an increase of 1.4%. So it only took one more day in August to get a home sold than it did in July. And look at that. Look at that steady increase from May. 2 days from May to June, 1 day from June to July, 1 day from July to August. Now, the good news here is that this shows a nice, slow, measured change in these numbers. I like to see that. Dramatic ups and downs, big changes, big bounces. Not something I usually want to see. It indicates a little bit, perhaps more of emotion involved in what's affecting the numbers. This is all much more calm. It's much more managed, it seems to me. So, and I think that all just speaks to the fact that we've got buyers out there that are starting to come out, specifically drawn by the lower prices. There's not a lot of panic, I think, involved in these numbers. Natural for this time of year for us to see the numbers start to go up a little bit with the huge number of homes out there that folks have to choose from. They're taking their time buying the house that they decide they want to buy. I think that's a factor as well. We did see an increase in sales. So one way to explain an increase in sales and an increase in days on market would be folks are simply taking their time. This is also a period in time, the summer months typically, when we tend to move out some of these older listings. So a slightly increased days on market would also be normal. But look back to January. Winter is when we tend to see these things peaking out, and of course we did in January of 2008. Where are we going from here? Well, let's look back to August of last year. Last year we were at 57 days. And then from there, it was actually kind of a peak there, and the number of days on market dropped in September and then steadily increased all the way to winter. It wouldn't surprise me if we see probably flat performance in this particular number as we lead up into winter, but I would bet once we hit October, we're definitely going to start to see things ramp up a little bit more. It may not ramp up as much as it did. In other words, we may not see a 30-day increase between August and January. It may be a smaller number. It may be a 10-day, 15-day. My guess would be that's about what we would say, but I'm not guessing we're going to see those numbers go way up beyond where it was last winter, simply because, as I've said before, we've seen more buyers out there, so it indicates to me we may see a more mild days on market number this winter. Now, that's really all I've got for you this month. If any of you would like to get in contact with me, or if you'd like to read any of my other articles on real estate, look at my other video presentations related to other communities, or you'd like to listen to my weekly podcast, you can find those at www.soldbyrobert.com. If you'd like to email me, please send anything you'd like to send my way to robert@soldbyrobert.com. If you'd like to call me directly, you can do so at 408-852-0525. And if you use AOL Instant Messenger, Google Talk, or Yahoo Instant Messenger, please find me at the screen name The Rebel Broker. And finally, referrals are always appreciated. If you or someone you know is interested in real estate in the Silicon Valley area, I would be happy to help them out. And of course, if you're interested in getting my new list for REO and short sale properties sent to you on a weekly basis, please contact me using any of the methods above, and I'll be happy to put you on the list. Thank you very much, and I'll talk to you all next time.